Shakalaka, today's video, I'm going to be talking about why the recession is already priced in Bitcoin, cryptocurrencies, and the stock market, agreeing with this University of Pennsylvania professor, and show you exactly why this is true for Bitcoin. You definitely want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're talking about why the recession is already priced in Bitcoin and cryptocurrencies. Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us over on Twitter at the Crypto Love. Push a like button, let's get to 1,000 likes. And also, today's video is sponsored by Nitro Network, so stay tuned till the end for a sponsored review of the project. Now, if we take a look today, look at this extreme fear all the way up to 19, pumping up from 14 yesterday and 10 last week. Now, this should be no surprise as the price goes up 5% today for the entire market. Bitcoin at $23.93, Ethereum at $11.59, BNB at $2.35, XRP at 32 cents, Cardano 46 cents, Solana $36, and Dogecoin 6 cents. Now, if we take a look at Bitcoin today, we are still hovering between this yellow and green line, the 200 weekly moving average and the 280 weekly moving average. Now, the 280 weekly moving average is historically the lowest average that Bitcoin price has ever touched. We touched that again back on about June 19th. Right now, we're hovering in the middle, right around previous all-time highs of $20,000. And as you may have noticed, the entire market sentiment no longer frothy, right now very salty. The number of social media posts mentioning Bitcoin going to zero has exploded. Blood is on the streets, as they say, according to Alessio Restani. You can see all these posts predicting the Bitcoin price going down to zero or $5,000. As a matter of fact, William Clemente posits here that back when Bitcoin was $68,000, everybody was like, I wish I bought earlier. Now that it's $20,000, everybody's like, it's a scam, it's going to zero. And notice these are the same people saying the exact things at different times. But if you are still in the markets today, pat yourself on the back because you are taking part in the largest bear market that Bitcoin has ever experienced. That's right, at the point we are right now. I'm not talking about a year in the future. I'm talking about where we are right now. This is the largest bear market, according to the area under the curve, that we have ever experienced with Bitcoin. And if we take a look, because generally, according to Alex Kruger, as a general rule, trading volume is the highest when markets capitulate, and such capitulation creates major bottoms. This weekly chart includes the aggregated Bitcoin volume for most Bitcoin pairs, spot and perpetuals across exchanges. Volume hit its all-time high 2 weeks ago. You can see that down here. Giant volume spike, likely being the bottom, or at least close to the bottom, a large capitulation event, similar to what we saw last summer when we had the bottom down there. Also, the COVID crash back in March of 2020. And this is one that I remember because it was kind of gutting. Bitcoin was staying, everybody thought Bitcoin was $6,500 was the bottom, and then boom, dropped out to $3,000. Gutted, but look at how small that was compared to what just recently happened. Likely a capitulation event signaling somewhere close to the bottom. Because if we take a look at this, Bitcoin has been somewhat correlated to the stock market recently. And we can see right now consumer confidence at all-time lows since 1972, 1971 even. Okay, all-time lows. Now, previous times when consumer confidence was this low, we have something called returning to the mean. We can see over the next 12 months, it went up 15%, 22%, 29%, 20%, 22%. Guess what? All of them had positive years following that low consumer confidence. If we take a look at the stock market, since 1877, only 4 years have been as bad as this year. And you're like, why are you talking about the stock market? This is Bitcoin and cryptocurrencies. Well, guess what? They're very, very correlated recently because they're both just as easy for anyone to trade. And likely what happens in the stock market will be reflected in Bitcoin and cryptocurrencies and vice versa. Well, as we can see, every year we had as negative a bottom as we've had recently. Guess what? All positive second halves. So to think that something different would happen would be kind of surprising because right now Bitcoin price drawdown from all-time high is very, very normal for historical bear markets. We can see the Bitcoin drawdown has reached 73.3% compared with previous market lows between 75% and 84%. The duration of this bear is 435 days from the April top or 227 days from the November top. This places the current bear within historical bear norms. Based on both time and based on drawdown, This is pretty normal for a Bitcoin bear market, what we're experiencing so far, and particularly the sentiment is very normal for a Bitcoin bear market. We're getting to the point where we might start to see a turnaround. The Bitcoin bottom is in when the derivatives market is shorting Bitcoin into the dirt after the brunt of spot selling has taken place. We're getting closer. We can see when the perps funding rate is in red, like it was last summer, like it was at the COVID bottom, like we're getting close to its orange right here. When that happens, when everybody thinks Bitcoin price is going down, then we have a giant short squeeze and the price shoots off. But thanks to blockchain, we can actually see what smart money is doing with Bitcoin and cryptocurrencies. Whales are buying it up. Since April, since the price has been falling to about $30,000 or below, people are buying up Bitcoin in droves. These are the same people that bought it up to sell again at both tops. Well, they're buying it up right now. And check out this divergence. We have the price going down. We have accumulation going up. This is going to lead to a supply shock at some point in time. And when that happens, the price goes up dramatically. The only thing that may still cause price to drop a little bit would be this pi cycle bottom indicator from the real plan C. Previous times when we had these crosses of the 471 SMA times 0.745 and the 150 EMA, previous times those were bottoms. There's another cross predicted for about 4 days from now, July 9th. We could potentially have another bottom, maybe a flash crash around that time. But other than that, everything is looking like we have come very, very close to the bottom. So back to what I was talking about in the beginning, why the recession is already priced in Bitcoin and cryptocurrencies. Now, the idea from this comes from a conversation I was having with my dad. We were talking about everything that's going on in the world right now. And I was like, was the world always this crazy? And he's like, no, we didn't have the 24-hour news cycle. We didn't have social media. We didn't have Twitter. You just didn't know what was going on in the world, period. You had the news for a half an hour twice a day. That was it. And most of the time, it was just some local stuff and maybe gigantic things across the world. Nowadays, we have this constant news loop. So everybody's been talking about the recession for the past year. Do you think that's not already priced in? This Wharton professor, in case you don't know Wharton, that's the business school at University of Pennsylvania, one of the Ivy League schools in the United States, one of the top schools in the United States. This professor, Jeremy Siegel, is one of the best stock watchers alive. He says the S&P 500 is already pricing in a recession and a bear market. Now, why is this? Well, he says the S&P officially entered bear market territory, dropping more than 3% to a level more than 20% off its January peak. The tech-heavy NASDAQ is now down 31% since the start of the year. Now, he goes on further to say that Siegel was asked whether he thought it was fair to say that a recession has been priced in, given the S&P 500 has seen an average contraction of 31% in each recession since World War II. He says, I think we're pricing in a mild recession. I'm not saying how severe the recession will actually be, but he does believe that the recession is already priced in the stock market. And if it's already priced in the stock market, you better believe it's already priced in Bitcoin and cryptocurrencies, because things happen in Bitcoin and crypto so much faster than the stock market. Not only that, but we're seeing already 31% down in the tech-heavy NASDAQ. Well, he says in every recession since World War II, guess what? The average drawdown was 31%. We're already there. Now, how does this relate to Bitcoin? If we take a look, and again, remember, we have 24-hour news cycles, we have Twitter nonstop, all of this stuff going on. If we take a look at the Bitcoin drawdown so far, roughly about 73% or so. Well, guess what? This time it happened in 210 days, okay? Now, if we take a look back in 2017, that took, for the price to go down that low, all the way to this area out here. That was 343 days, close to double. If we go back to 2013, 2014, guess what? All the way till out here, 308 days. That means it happened this time 50% faster, over half a time faster than it did previously. So me personally, I think things are looking like it's already priced in, considering that the price is already down to levels, historically, the lowest levels Bitcoin has ever gotten to with the 280 weekly moving average. Now, that being said, could the price go lower? Absolutely. I can't predict the price. It could always go lower. We've seen previously, especially over the past few months, a lot of manipulation causing the price to tank. So could it go much lower? Absolutely. But as of right now, things are looking like they are pretty well priced in, and shorting Bitcoin and cryptocurrencies at this point might be a very, very risky move. So that's all for the episode today. Now for the sponsored review of Nitro Network. Now this is a sponsored review. This is not an endorsement of the project. I'm merely educating you about the project, and then you can do your own research and figure out if this is something that you would be interested in. So Nitro Network, you can check out their website at nitro.network. Nitro bot non-fungible miners. Earn Ncash while you sleep with Nitro bots. Powered by the Nitro Network, owners of the Nitro bots will be the first participants inside Nitro Network's decentralized private communication network. Nitro bots are non-fungible miners, NFMs, that reward owners with Ncash, Nitro's native utility token. Rewards are generated from Nitro's off-chain business partnerships. Owners receive Ncash rewards every 30 minutes for as long as they own and stake their Nitro bot. Choose your tier, mint your NFM, and let the robots do the rest. And you can buy your NFMs right down there. You can see some examples of what they look like right here. And if we take a look, there's multi-tiered non-fungible miners. So tier 1 iconic Nitro bots, and you can see the rewards 95.69 Ncash per epoch. Tier 2 premium Nitro bots, rewards are 80 Ncash per epoch. And tier 3 top Nitro bots, 24.18 Ncash per epoch. And if you click, you can see the details right here. We can see that tier 1 and tier 2 bots are available right now. Tier 3 are not for sale at the current time. Now, if we go on further, NFM utility. NitroBot NFMs fund the Nitro Ion Nestor miners that connect to and enable Nitro Network's innovative decentralized private communication network. Each collective NFM is a decentralized representation of an actual nesting device deployed in a Nitro Network city, and these NFMs are able to generate unlimited rewards in the form of Ncash, Nitro Network's Avalanche-based native utility token. 5,000 nesters are being deployed to dense urban areas such as New York City and Dubai. The initial deployment of nesters will occur in dense urban areas of the United States and India in cities like New York City, Los Angeles, Mumbai, and Delhi. We can see the team here, the big bots. We have CEO Snoop Anoop, CTO, COO, and CPO here. Now, some other things about Nitro Network. Nitro Network is building the largest decentralized private communication network powered by IoT combined with LoRaWAN and 3G, 4G, 5G. This hyper-connected world will enable unlimited use cases in our everyday life. Participants of Nitro's decentralized PCN are part of an inclusive ecosystem that they own, operate, and earn from. Nitro's PCN will be a game changer, and it has proprietary token Ncash at its core. On the Nitro Network, everyone wins. Now, if you click Enter Ecosystem up here, you can actually see what the nesters look like. Build telecom networks with us, own, operate, and earn. Nitro's decentralized networks open endless possibilities for participants to build, grow, and monetize from the network perpetually. And you can see the NFM bundles are coming soon, the Genesis nodes, the Nester, and the Super Nest. So, that being said about Nitro Network, overall things they want you to remember: NFMs are non-fungible miners that allow holders to earn rewards from Nitro Network's off-chain IoT solutions. All you need to do is buy and stake your NFM to earn rewards. Rewards in our native token Ncash is already being earned every 30 minutes by those who have purchased and staked their NFMs. Nitro Network is burning Ncash at regular intervals to increase the value of rewards. You can access the Ncash burn page and track progress at burn.nitro.network. They're offering 25% off for all NFM purchased with the promo code CryptoL25, and we'll post that down in the description. And then the value of NFM rewards could be going up as Nitro Network continues to provide real-world IoT solutions while bringing the benefits to NFM owners through Ncash. So guys, that is all for the video on Nitro Network. Thank you very much for sponsoring the video. If you want to check this out, you can go to their website, nitro.network, or click the link down in the description. I will catch you guys later. Have a good one. Love you. Peace.